You know the frustrating part about most oscillators? They tell you the market is overbought or oversold, but never mention exactly when to enter or exit a trade. RSI, stochastic, MACD, they all suffer from the same problem. They give you general areas where the market might reverse, but leave you guessing about the precise moment to pull the trigger, and that guesswork ends up blowing up trading accounts. But what if there was an oscillator that didn't just show you overbought and oversold conditions, but actually gave you exact entry and exit signals? That's exactly what this indicator does, and in this video, I'll show you how this indicator works, the best setting for accurate signals, and 3 powerful applications for maximum profits. But first, let's add this indicator to your chart. You want to head over to TradingView and pull up any Forex pair you want. I'm using the 5-minute time frame on GBP, JPY, but this works on any market, any time frame. Click on Indicators and type in DSL Oscillator. Make sure you select the one by Big Beluga. Now, most oscillators just follow momentum and leave the interpretation up to you. But DSL isn't your regular oscillator. It's designed to make trading decisions crystal clear. It combines advanced signal processing techniques to eliminate lag and provide precise trading signals. DSL stands for Discontinued Signal Lines, which creates a framework for identifying exact entry and exit points. And when combined with an oscillator that's enhanced with zero lag processing, you get something truly powerful. A tool that tells you exactly when to enter and exit trades. Let me break down the key components for you. Looking at the DSL oscillator, you'll see it's made up of several key components. First is the main DSL oscillator line, this solid line that changes color between blue and teal. It's based on a combination of RSI and DSL lines, then smoothed using zero lag processing to eliminate delays. Next, you've got the discontinued signal lines, these 2 dotted lines that traverse the indicator window. These are critical because they create the framework for your entry and exit signals. The oscillator itself ranges from 0 to 100, with the 50 level acting as the midpoint. So, when the oscillator and signal lines are above 50, you're in bullish territory. And when they're below 50, it means you're in bearish territory. But here's the powerful part. See these vertical bars with labels? This is where the magic happens. When the DSL oscillator crosses above the lower DSL line, and this cross happens below the 50 level, you get an enter signal on your chart. That's your buy trigger. When the DSL oscillator crosses below the upper DSL line, and this cross happens above the 50 level, you get an exit signal. That either means your exit from longs or your entry for shorts. The indicator also includes extremity levels at 25 and 75, marking potential overbought and oversold zones where reversals might occur. Now, most traders still mess it up. They slap it on a chart, take every signal, and wonder why they're still losing money. Because having an indicator means nothing if you don't have a proven system behind it. This is what separates the top 1% of traders, strategies that have been achieving results like this consistently for years, that's built using the most advanced algorithms out there. The good news, you can now trade with over 50 of these top strategies too.
Across all markets, this is how to stop wasting your time and losing money right away. So, do what's right and get access with the link in the description now before it's too late. Now that you understand the key components of the DSL oscillator, let's get your settings right. Double-click on the DSL oscillator to open up the settings panel. The most important setting is the oscillator length. This controls how responsive the indicator is to price changes. If you set it too low, you'll get more signals, but also more false ones. Too high, and you'll miss important moves. For the 5-minute chart we're using, a length of 14 works perfectly. For daily charts, you'll want to increase to 21. Once you've adjusted your settings, click OK. Now, the DSL oscillator isn't just a one-trick tool. It has 3 powerful applications that, when used together, create a complete trading approach. The first is signal generation. This is the most direct use. When you see enter and exit labels on your chart, those are your precise entry and exit points. When an enter signal appears, that's your buy trigger. Instrumental music. When an exit signal appears, that's either your sell trigger or your exit from a long position. The second is trend direction identification. The position of the oscillator relative to the 50 level tells you the overall market direction. When the oscillator consistently stays above 50, you're in a bullish trend. When it stays below 50, you're in a bearish trend. This helps you trade in alignment with the bigger picture. The third, and my favorite, is momentum analysis. The distance between the oscillator and the signal lines shows the strength of the current move. When the oscillator is far away from the signal lines, momentum is strong, and as it starts converging with the signal lines, momentum is weakening, a warning sign that the trend is losing steam. But I should warn you, not all DSL oscillator signals are created equal. Understanding the strength behind each signal is key to maximizing your success rate. Strong signals occur when the oscillator crosses the signal line with significant momentum. Look at this example. The oscillator crossed well below the lower signal line, creating a powerful enter signal. The trade that followed moved directly to target with almost no drawdown. That's the power of a strong signal. Moderate signals happen when the oscillator crosses the signal line with less momentum. These trades can still be profitable, but they might take longer to develop and experience more drawdown. Weak signals occur when the oscillator barely crosses the signal line. These often lead to choppy trades or false signals. The rule is simple. The greater the distance between the oscillator and the signal line after the crossover, the stronger the signal and the higher the probability of success. This is especially true when the crossover happens in extreme territory, below 25 for buys or above 75 for sells. But even the strongest oscillator signals can fail if you're fighting against the bigger trend. In fact, trading against the overall market direction is the fastest way to blow up your account, no matter how good your timing is. And while the DSL oscillator shows you exactly when to enter and exit, you still need to confirm you're trading in the right market direction. This is exactly why professional traders pair it with QQE mod. To add QQE mod to your chart, simply head back to TradingView and search for QQE mod. Make sure you select the one by Mikhail00. Now, QQE mod is perfect for this strategy because of its ability to filter out false signals while confirming true momentum. The QQE mod shows blue histogram bars for bullish momentum and red for bearish. The white line crossing above 50 indicates bullish pressure, while crossing below 50 shows bearish pressure. Look at this perfect example. DSL oscillator gave an enter signal, and QQE mod confirmed it with blue bars and the white line above 50. We entered long, placed our stop below the recent swing low,